GM.
Good morning.
Yes. Good morning.
Tomorrow.
Boy,
Fuck.
back in October of 1987, there was
We're going back.
an experience, a moment called Black Monday. And that is what it is for crypto today. Yes, traditional markets are down and are down on the year a good 20 or 30%, but crypto is having a moment, as we can see today. Things are not looking good. At the same time, things are not looking good. That's pretty much it. It was a weekend of systemic risk. It's specific to the Ethereum blockchain too. Bitcoin is caught up in it, sure, but Bitcoin is down 7% versus Ethereum's 19%.
No, it's Bitcoin's taking a beating too this time.
Is it?
Yeah.
Is it starting to catch up? Still.
Yeah, it's double digits too, though. I'll pull it up in a second. I was just typing a tweet out. Wow, and my internet just decided to take a shit. Or CoinGecko's getting smashed. Maybe that's what it is.
Everyone's going on. The Bitcoin maxis were celebrate. I know it's hard to say anyone was celebrating this weekend, and believe me, when people are celebrating, they're all smiling through their teeth. This is like the Solana people are making fun of ETH. The ETH people are making fun of AVAX. The Bitcoin people are making fun of everybody. It is
Bitcoin down 14% on the day. So
This is not the warm and fuzzies right now. Everybody's at each other's throats. I mean, this is what happens. This is an absolute popping of the I mean, we're talking 95, 99% down. Now, here is what I am a firm believer of, especially with what we have coming up this week. We are very close to a bottom in time, okay? The Federal Reserve is meeting on Wednesday. We got that hot inflation number on Friday. It confirmed everyone's sentiment, right? This was confirmation bias. Everybody understood, okay, everything we thought is true. In reality, if you look under the surface, inflation numbers have already been abating a little bit. And that's mainly because at least half of our inflation issue is supply chain. And that's supply chains out of China. And that's also the breadbasket of Europe, being Ukraine involved in a war. Those things have been, at least in regards to China reopening, because COVID has died down, that is helping us under the surface, and the Fed already sees it. So they're almost in a tough place of, well, we have this headline number we have to react to calm down markets, but we're already seeing things improve. Overreacting here for no reason could put us deeper into a slowdown than we want, right? The Fed is aiming for what they are referring to as a soft-ish landing, okay? When
the ish is getting very ish.
Exactly. I am telling you, the needle that they have to thread right now to accomplish this it's a very tight spot they're in, right? Because in order to calm down inflation, they have to slow down the economy. And it's very hard to slow down something moving that fast in a gentle manner. So if they raise interest rates aggressively and put us into a recession, most of the inflation may not even abate that much, because if it's Ukraine and China as the issue, putting us into a recession just adds to it. It doesn't actually help it. Yet, it's the only tool they have right now to actually slow down those price increases. So that's why it's been one of those traditionally tough spot for the market, it's because of the unknown. It's not even the known. If we knew what was happening and the Fed could say very confidently what was happening, even if it was a little worse than we were expecting, markets would probably try to carve out a bottom. Until then, they are just in absolute manic mode. And I am looking at tech stocks right now. Generational buy. I will put my neck out and say, things like Coinbase, things like Square, even something as hated as Netflix. Okay, all of these things are on discount.
I don't know if I'm as bullish on Netflix, but I mean, I think Coinbase and some of these other ones. Yeah, keep going.
No, and Amazon, which just had its stock split. It's $105 right now. I think tech has been beaten down so much. And I will say big caps may have a little farther to go than the smaller caps, right? I think a lot of the unprofitable smaller tech companies are never coming back. And the ones that were dragged down unfairly are going to have very nice rebounds. I think these are going to be what is to buy. I've been very passionate about commodities, specifically natural gas, over the last 2 years. I missed the last leg up of the tech bull run, but rotating into energy has really insulated that part of the portfolio because of the rise in natural gas. Now,
I'm going to pull up some stocks while you're talking here too, but yeah, Coinbase sitting at $50, down 14% today.
Well, the S&P opened in bear market territory. Now, you hear the term bear market bandied about a lot. In technical terms, that means 20% drawdown from the top. That's a technical bear market. And the S&P opened in that technical bear market today. That's another psychological area where you would think that there's going to be a relief rally. And this isn't hopium. This is just the market mechanics of how things work. It doesn't mean we're out of the woods. It doesn't mean that we still need a lot of luck to get this soft-ish landing. And what they mean by soft-ish landing is we'd probably see a recession, not this year, if I had to get, because I am telling you, man, that labor market is still incredibly tight. Restaurants are full. The people who are feeling it worst right now are the people who don't usually feel it. Those are the people holding risk assets. For the last few decades, holding risk assets has been the you're not doing it right. Holding risk assets is where you want it to be. Well, for the first 6 months of the year, everyone on Main Street with a job has been Main Street with a job is where you want to be, because while inflation has been hot, wages are up. And the labor market is very tight, meaning unemployment is very low. That's the reason you hear people stick their neck out like Jim Cramer or I and say things like, we don't think there's going to be a recession, is because it's very hard to get what's known as a classic recession with, under 4% unemployment. It doesn't happen. So this is a very tight labor.
Well, hold on. Okay, yeah, correct. But the unemployment numbers only factor in people who are actively looking for jobs, correct?
The labor participation rate, which is the number that you can track to see how many people are looking for jobs, has been trending down since the great financial crisis, the GFC. This has been a secular trend. That's a combination of automation and efficiencies, like how many people it takes to run a Silicon Valley company where the majority of capital has been going. I know there were always numbers that showed something, like it takes 95% less employees to run Facebook than it did General Electric at its peak or something like that. So it requires less people to run the companies where the majority of capital was flowing. That's a very interesting implication and question, too, where software engineers overpaid for decades. You could argue that, especially now, as a lot of the capital is flowing towards hard goods, consumer, staples, things like that. So this is why people again have been saying maybe not a recession, even though we have very high inflation. I mean, inflation is another word for growth. It's coming from somewhere. And even though the labor participation rate has been going down, it would still be very hard to have a recession with this type of unemployment. Now, if the Fed continues raising like this, I think they would cause a recession early next year. But it would be a small one based on everything we're seeing. Right? Like the question is, do they put you into a multi-year recession that borders on a depression, or is it a quick technical recession? That is what we have to say. They need a lot of luck at this point. There is nothing on their side, so to say. Everything's working against them. So you just need a lot of things to fall into place at the same time that they make the right moves. It's a lot.
Sorry, I restream. I think it's actually my computer that's rugging me right now. I don't know what's going on. It seems to be running high. Yeah, no, just back to the labor point. I know there was one stat that was released that while labor, the percentage is very low, there's a larger amount of people than ever that aren't actually trying to go back to work. And that's putting a lot of pressure on things like supply chain and whatnot as well. You know what I mean? Like,
yeah. I
can't remember what the technical term for that percentage is, but it's like the amount of people sitting on the sidelines, because those labor numbers
participation rate.
Yeah, and it is at like 30 or 40 year highs, I think, which is the tough part. So, you know, a lot of the theory, the thesis is so much money has been handed out during COVID and all of that stuff, like unemployment and businesses folding and trying to prop people up with living expenses, that now they're like, well, I just would rather keep taking free money. And, you know, starts the conversation. You probably don't hear it in the States very much, but in Europe and in Canada, you'd start talking about universal basic income. And you know what? The honest thing is that, like, the jig is up, right? Like, people are going to have to go back to work if you are able to. That's just I think that's just part of it. You have, like, the economy, and I know people, there are a lot of people, probably not tons listening to this show, but a lot of people will say, like, oh, like, the whole economy is rigged. It's all a joke. It's all a scam for wealthy people to get wealthier, and capitalism is just screwing me. Like, there's no way I'm going back to work. But you do have to contribute. That's the thing, right? If you're able to.
Yep. Got to stake yourself in society for proof of work.
Yeah, proof of work. Yeah, the next meta, proof of job.
Proof of job.
Yeah. Work to earn. That was what they were talking about. Yeah. I don't know. Dickens is yelling no. Did we catch why? I keep getting rugged by restream. Or sorry, my computer. Restream.
He would prefer that everyone doesn't have to go back to work.
Yeah.
Is when that no came.
So on that note, today's episode sponsored to you by Wendy's.
What's Wendy's theme? So I can't remember. Do they have like a jingle or? I always do the ones. But
they nailed it with that. A lot of people were so annoyed when they did it, but man, everyone does it. All right, well, let's put some context into it for anybody listening in and not watching. Bitcoin sitting at 23,500 right now, down 14.5% on the day. ETH 1220, very, very briefly dipped below the 1,200 mark. I think 1175 was a number that we saw on the screen there. Down 16.5%. Tough way to wake up. Those are big numbers. Those are ugly numbers. And, I don't want to bring anyone in here and just be overly bearish. And, this is a conversation we're having together. But, at this point, I don't think there's necessarily a bottom in sight. I mean, Free Market was talking about, maybe we're in a bottom for time. How far the price drops in that time could be coming up soon. But, I would definitely not be encouraging anybody to sell the house and buy as much crypto as possible. if you have capital on the sidelines and you're looking to redeploy it, I think you're starting to look at some pretty good times. But I would just set I would set a DCA and just forget it, because you know, trying to time this kind of bottom is nasty. We saw tons of people try and do it in 2018, and the simple fact of the matter is that it did just keep going down. You know, people kept saying, oh, ETH is at 800, we were at 2K, can't go any lower. Oh, 600, can't go any lower. 500, can't go any lower. And again, I'm not trying to scare anybody off or make them feel bad, but I'm just saying, you're in treacherous water, and don't do anything that's going to put you in a situation that's going to greatly affect your life. Is basically what I'm getting at. You know,
yeah.
if your time horizon is long enough, like it was back then, and like, you know, we always say zoom out, it's super corny and everyone said it a million times. If your time horizon's long enough and you're not putting yourself in a position where you need the price to go up in the next month, or, you know, you will be fine. But I wouldn't be selling here. I wouldn't be throwing all of my money at it here.
You can't go all in. I mean, look,
no.
You guys want a little hopium, all right? So there's $3 trillion in cash on the sidelines that banks are sitting on right now. And they're sitting on that cash, which is largely an effect of the Federal Reserve giving it to them during reverse repos over the last year and all this stuff. And they're waiting to deploy, okay? They are obviously waiting for the same cues as the Federal Reserve that everyone else is waiting for. But I want you to contrast that to 2009, where there was no liquidity, okay? We talk about liquidity crises. That is not what we're going through right now, except for pockets of the market where capital was poorly allocated. And that is tech stocks that had no revenue, and leveraged up bets on crypto that have no revenue. And those areas need to wash out. Of course, we have the bond crisis, which has been building for decades, unfolding at the same time, obviously causing a perfect storm. But it is not for lack of liquidity. This is a fear of what you'll be able to buy with that liquidity. So the liquidity is on pause. It is not gone or non-existent. That makes this different from other times. Okay. Now, I'm not talking about the crypto specific bear market that could last 2 years. If we're talking about crypto specifically, what gets us out of the bear market, I think it's a new meta. And I don't know what that meta is, right? Like, you could say that DeFi was the last meta to get us out of what was happening in 2018. Institutional adoption and DeFi, and then NFTs were what popped up, you know, the culmination of that bubble or whatever. What is the new, you know, obviously they're not just going to go to DeFi 2.0 again, because everyone calls that a Ponzi. It doesn't work, blah, 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 blah. So they're going to reinvent DeFi. It'll be DeFi 3.0. There'll be all these reasons why this DeFi isn't a Ponzi, and maybe it won't be. I do think there will be a lot more like regulation and responsibility next time around, because that's the only thing that's really going to attract actual money from VCs going forward. But that's what I think crypto's good. That new meta can come sooner than we think, or it can take longer than we think. But I don't think it's going to be a factor of just macro all of a sudden getting better, because what's happening in crypto is wiping out all the stuff that's built on top of it. The reason for, we need a new proposition to the masses as to why you should use this stuff. I think NFTs transforming are going to be part of it. But we also need some sort of DeFi component as well. So we're waiting for that. But markets, I do think the stock market is presenting, especially in technology, a lot of deals right now. And because the Fed has to report on Wednesday, closer to a bottom than not.
So we mentioned Coinbase a little bit earlier. Did you kind of see what's going on with them internally right now?
Yes.
And why I would say you could actually be pretty bullish on this company based on his leadership. I mean, look, in times like this when things are down, it gets hairy. Stock prices go down. A lot of employees are compensated in shares and equity and stuff like that on top of their salary as a bonus layer. And of course, when the stock price of a company goes down, so does their compensation, and then people start getting squirrely. So right now within Coinbase, they've got a petition going around to revive coin. They basically want to remove all of the executives off of the board and the management layers, saying that they failed the company and whatnot. Brian Armstrong has obviously been very outspoken in the past about corporate culture, saying politics and these political stances don't have any they don't have any place within corporate culture. You're free to believe and feel whatever you want on your own time and in your own personal life. But the second that they start to infiltrate a company whose mission is completely outside of those belief structures, you start to lose sight. Of course, Coinbase got a lot of flack recently for rescinding a large amount of job offers that they said they were going to offer, just basically due to the downturn. I mean, capital starts drying up and you got to do what you got to do. But I mean, when you're looking at a company that's going to survive markets like these, the ones that make the tough choices and, aren't afraid of, I'm going to air quote here, looking like the bad guys, if they're rooted in reality and they do the things that they need to do to survive it and come out the other side of it better, I think that's always a good sign to look for. Of course, they're citing things like the failed NFT marketplace. I have a hard time disagreeing with the NFT marketplace being a bit of a flop and a bit of a nothing burger. But again, I think Free Market and I have been kind of in consensus with the idea of like the Coinbase NFT marketplace doesn't really exist until you open up Coinbase, the app on your phone, and it is staring you right in the face. That I think will be very bullish. I think that this is very, very soft opening for them for the NFT marketplace. It was very underwhelming, but I do think that there's more to come for that. But going back to just the larger overall scheme of the company, like, it's a tough situation to be in, but these executives, these CEOs, these founders that make tough choices now, I think will reap benefits much later on in the company.
Yeah. And the other thing over the weekend with Coinbase, Mike Dudas of The Block and has his own VC firm. He was having some institutional gripes with them about being able to get stables off and all this type of stuff. But I tend to agree with R2. I think Coinbase is going to make it through this, and they're part of that tech basket that's wildly undervalued right now. It's one of those things where it's so hard in this type of environment to pick an exact bottom. But if you buy it now and come back in a year, it's going to be more valuable, and you'll be the beneficiary of that beautiful long-term capital gains tax.
The final kind of quote from that article from Brian Armstrong is, in any down market, people want to start pointing fingers and find someone to blame. Recognize this mental trap and don't fall into it. Teams have to pull together and act as one company during difficult periods, not turn on each other. I do think the same can be said for any kind of community, large or small, NFT community, the crypto community. Markets ebb and flow, and in days like this, people are looking for the reasons why, and you could kind of find them, but I think turning on each other and blaming everybody else, it's a dangerous road to go down. Even just like like you said, a mental trap, right? I also want to pull up this tweet thread that OSF wrote. Did you happen to see this morning? Or yeah, actually it was yesterday morning. Sorry, my mistake.
No, read it out.
OSF from founder of Wrecked Guy wrote, if you're feeling bad and need a pep talk, here's mine. Tough times are out there again today, with ETH moving lower and NFT volumes a lot lower too, and a lack of any meaningful liquidity after Friday's inflation number, and partly due to a liquidity crunch in Steth. What is Steth? I don't know.
Staked ETH.
Staked ETH. Okay.
We were gonna go. I'll go over that next. That's where the systemic risk is and where all the drama is. We'll talk about that.
Perfect. We seem to be heading towards a quote unquote worst case scenario. Hence, the market is understandably throwing a tantrum. This is only my second crypto cycle, but probably my fifth or sixth real market cycle. And let me tell you something, it's always the same story over and over again. The market goes in cyclical. We go down, we go up, but the long-term trend over an expanded period of time is up, because guess what? The world progresses, grows, and becomes more efficient. You can pull up a 100-year S&P 500 chart and zoom out and think, oh my God, we have so much lower to go. But that is a fool's game. You could have done that in 2008, 2011, 13, 16, 18, and in 2020. And guess what? Every time in the next year or two later, we saw new highs. But this time is different. Is it? Let me tell you, every few years, there is always going to be another new reason for markets to go lower. That's just how it works. But for every bad reason, there's also a good reason. And it just takes a bit of time and patience for it to come. Just think about March 2020. And this is the point that I really like to go over again. And I know we've talked about it before, but, take yourself back to where you were in March 2020, of course, at the beginning of the pandemic. It literally felt like the world was going to end at some point. An unknown disease, complete uncertainty, the entire economy shut down. Yet, if you sold in March 2020, that would have been one of the worst sales in history, because guess what? Humans figured it out. They always do. I can't tell you what the exact solution is here, and I can't tell you how long it will take, but I'm certainly not calling it a bottom, but I am telling you that although history never repeats itself, it certainly rhymes. At some point in time, we'll start hearing bull cases and the paradigm will shift. So now it comes down to your personal situation. If you are overextended or need the money for IRL stuff, in debt, etc., then you should sell. We're at the point of massive uncertainty, and nobody should be gambling with money they can't afford to lose. I've been writing for weeks about dollar cost averaging, and I fully believe that that's the right strategy and people will make fortunes from it. However, I've made sure I've taken enough cash out for IRL needs not to have to worry if it keeps going lower and be able to add. That's not a brag, but it is an important point that if I wasn't in this situation, I wouldn't be buying. And if I had IRL requirements, I'd probably be selling. The point I'm trying to make here is that you have to be honest with yourself. I'd strongly recommend budgeting and devising a strategy. How much do you need IRL? He does go on. It does start to shift into the Wrecked Guy project, of course, that he founded and did very well there and whatnot. But I thought he put it just really good in just normal everyday terms. It's probably nothing that you haven't thought of or haven't heard before, but it was kind of just a nice reminder. And I don't think the overarching thing entirely was zoom out, but a little bit of perspective is always in order here. Again, come up with a plan that puts you in a decent situation to hold through it, and you'll reap the rewards when the time comes, right? But now is a time where, builders build, founders found, millionaires are made, but it's not going to happen overnight, not in this market.
Right. And, try to look at those angles. There's always angles that were missed last time that people are going to try to improve on this time, that create the new meta. And this is where you figure those things out. So.
Yeah, there's a lot of people that are sitting out there saying everything's oversold. It's the deals of a lifetime, and nobody. Well, I don't want to say nobody, but most people aren't saying that means that a bottom is in. But I do think, if you're buying now and you're dollar cost averaging as OSF suggests, and it continues to go down for the short term or even the medium term. Eventually that the price of the asset will cross back over your dollar cost average, and you're going to start to feel a little bit better about things. And then we're going to go through another cycle where things really start to get off again. We haven't hit mass adoption in crypto. We certainly haven't hit mass adoption for NFTs. It felt like it in the bubble, not the price bubble that we were in, but the communal bubble we were in when we're talking about it. We hit that echo chamber. Felt like we are going to make it. We have made it. We did make it. Make it. We were early. We're not. We are. We're not at anywhere near mass adoption. You'll know when we get there, because if you play this patiently, you play it correctly, and you don't overextend yourself to the point where you can risk ruin, you'll feel very good about it in 10 years, 5 years, 4 years. I don't know, maybe a year. Who knows?
Well,
I just want to finish it off with one point, though.
Sure.
We will reach a point in the future where people are looking back, the normies are looking back and go, fuck, I wish I had bought that dip in 2022. This is going to be one of those dips where people go, oh man, like it was down there and it was that cheap and everyone thought it was dead. I wish I had bought it in 2022. That's it.
At the lows, everybody will tell you it's going 50% lower, and that the bull market's going to last 10 years. So it's very hard to distinguish when that's true and when it's not, when you're in it, because it feels real when it's happening.
Mm-hmm. Yeah, I mean, there's going to be a point where Bitcoin hits $200,000, and ETH hits, $20,000, or however you want to, put those numbers, bigger, lower, whatever. But there are going to be people that look at this chart, getting into it for the first time, and I think almost everybody in the world is like, oh, if I had only bought Bitcoin in 2009 and I had only bought ETH in 2014 and whatnot. Like, you can go back there and like that's obvious, but. There were plenty of people that now entered somewhere in this wild swing up that said, fuck, ETH was just sitting there at $150 for a year. ETH was sitting there at sub $100 on this date. Bitcoin was sitting at $6,000 for 2 years, right? So many people have that cope too. This dip here is going to be one of those times where people were like, shit, ETH was only at $1,100. I'm just saying,
yes,
it's not going to be an overnight thing. We're not going to wake up tomorrow or next week and ETH is at $4,000 again. It's not. It's just,
prove it.
Well, hey, I crazier things have happened, honestly.
No,
but we're not in a situation right now. That would be the
craziest thing that's ever happened.
Yeah. Yeah. Okay. Maybe.
Great. In history, the craziest.
But right now, what I'm seeing is like we talk a lot about shaking out the paper hands, shaking out the the crypto bros that are just out on the streets, be like, bro, but, like all of those people, all of the we're doing a lot of that right now. But what this dip is really doing is shaking out a lot of the actual like legitimate shit in our industry. The unfortunate reality is that there's going to be a lot of exchanges that don't have the liquidity that they said they did, and people are trying to desperately cash out, and it's going to get messy for some of those. There's going to be a lot of shit coins on this list, just like there was back in 2018, that never ever see their all-time highs again. I'm not going to tell you which ones they are and which ones they're not, because I don't know the answer to that.
One. Oh,
tell you one?
I was going to say, just tell me just one.
No, I don't know. Hedera. Never heard of it.
You're like, nope, that one never coming back.
This one. I mean, I'm not betting the farm on it, but like, let's look at what happened in the year. Yeah, it was 50 cents. It's 6 cents right now. Maybe. I don't know. If somebody is invested in Hedera and you have the bull case on it, let me know. But look, this CoinGecko list, the CoinMarketCap list, the dozens and dozens, hundreds of pages is just riddled with coins that all had their moment in 2018 and never, ever got close again, and they never will. I would say if there's two coins that I feel good about owning through this and holding through it, it would be Bitcoin and Ethereum. You could pick out a couple others in the top 20 that you could probably feel pretty good about, but some of them you just got to deal with the cope that it wasn't the right one, and move on, because this market is going to shake them out too. Because understand what happens is a lot of these companies or the coins that do ICOs take money in ETH and Bitcoin, mostly ETH now. And when ETH gets devalued, they run out of money to pay people. Development stops, the community dries up, and there's just no way back from it. So yeah, that's my spiel on that.
Ethereum.
You're about to say something. I don't know if I had interrupted your train of thought.
Yes. No, I don't know. But we can talk about Celsius, Alameda, and what's happening with staked ETH, because
Celsius is in a rough spot too.
That is specifically why ETH is down so much more than Bitcoin right now, and Bitcoin maxis are celebrating. So Celsius, which is, I suppose, some sort of exchange or crypto bank of sorts with 1.7 million customers, is not solvent. And the majority of their solvency is in something called staked ETH. This staked ETH is a 1-for-1 price with ETH and 100% backed by ETH, but, and this is the key, it is not accessible until the merge. Therefore, it is locked up. So if you need said ETH, you cannot access it right now. That is the only liquidity available for Celsius. So they have been trying to sell their staked ETH over the counter OTC to Alameda, and they started doing it over the weekend. And what Alameda would do is they would short ETH perps every time they bought a $5 million tranche from Celsius to hedge themselves, because Celsius was selling it to them at a discount. Therefore, if you just hedge ETH wherever it is when they sell it to you, you bank the difference no matter what happens afterwards, because you're long the staked ETH and you're short the perp ETH, and you just get to make what's in the middle. So you don't really care. Now, obviously, the rest of us care, because as they were shorting this perp, it kept sending ETH lower. And as the market figured out what was going on and Celsius customers got worried and tried to withdraw, they stopped withdrawals from Celsius, and now people are worried about contagion.
Yeah, it's the Luna all over again, right?
Yeah, exactly. Same thing as Luna. And now Tron and TRX seems to be having Luna-esque issues, with Justin Sun having to send $1 billion in Bitcoin over to stop the depegging of Tron and TRX as well. So contagion, stablecoin, and staked ETH, the culprit this weekend in making the crypto sell-off what it is. And obviously, inflation, this is the perfect storm of stuff go down. And if there is a bounce, if we're waiting for a bounce, the only reason we could even suspect a bounce here would be because we have sold off 80, 50% from the highs because of this. So eventually, we are going to have priced that in. When that is now, we don't know. It is like trying to catch a falling knife, as the old saying goes. Most of us are just watching or DCAing. I think DCAing from 1,200 to 800 is probably the best you can get here. If it fell under that, well, not a lot of people had those price targets, even though there's a lot of bandwagon jumpers now, and people just sarcastically throwing in the towel and calling for 400, 200, or zero. You see a lot of that now, but yeah, there it is.
Yeah.
Celsius.
Again, if you want to go back to absolute worst case scenarios, these two right here, Tether and USDC, those are the ones that have to hold, right? And Tether has held through a lot of shit over the past 5 years. So, I don't think that the Tether FUD or the Tether scandal or whatever that narrative that people keep pushing is is as substantiated. It seems to be holding its ground right now. But those, regardless, I'm not here to make a statement on whether or not that is true. Just they need to hold, because if those things start to collapse, there's gonna be a lot of rubble.
Mm-hmm. Rubble, soil and trouble.
Yes, sir. Shit. Yeah, that's where we're at right now.
Shit.
I mean, we could jump into some NFT stuff. I've got Jack Dorsey starting up Web 5. Nobody can figure out what happened to Web 4, but Jack Dorsey doesn't like Web 3, so we're going to Web 5.
Yeah, that needle is certainly a lot more pronounced now. Not feeling fabulous on that one.
Who, Jack?
No, the Web 3 who was like, oh, haha, stupid joke. We're now like, haha.
Yeah.
Joke.
I don't even know. Did we figure out what Web 5 is? It's like extra decentralized.
No, it was Web 3. He described Web 3. He's just,
right.
He is just declaring ETH and Web 3 dead, and saying that he's going to invent Web 5, which is just Web 3, but Jack invents it.
Right. Built on Bitcoin, of course.
Yes. Lightning Network, he's a proponent of.
Yeah, Lightning Network's actually pretty strong. They do a good job there.
Pretty strong.
Seth Green got his Bored Ape back.
Woo! Bored Apes just hit 70.
Wow. He overpaid, but he had to get his show. They were canceling it. He paid $295,000 at current price. Is 165 ETH.
This is many dollars for very little ape.
Yeah. Talk about buying high. I'm sure, he was threatening legal action against the guy who bought it.
Well,
yeah. I'm sure Seth Green is doing all right, and I'm sure whoever was producing or funding the show probably just had to bite the bullet and pony up to get the Bored Ape back. But they did, and now White Horse Tavern can resume.
I feel like there's a real appetite right now for a Bored Ape TV.
Yeah,
That their built-in audience is
down bad.
Down bad.
Yeah. We'll see. We'll see. Man, I don't know. I'm like, sure, Look, we want everyone to have like a good time and stay this, but it is what it is, right? We are all feeling the effects of this one. We can refresh the news and see what's going on. And this note, we got Wendy's job opportunities. If you live in Ontario and you want to go to Thunder Bay, $21 an hour to manage that restaurant. That isn't Canadian. That's probably like what, 17 American.
Okay.
I think cost of living is pretty low in Thunder Bay, though. Like, I don't think it's not super expensive there. So Wendy's crew member, there you go.
All right, I could crash on your couch and apply for that.
Well, Thunder Bay's a long commute.
Is it?
Yeah.
It'll be a brisk jog in the morning.
You're probably looking at a good 8. I think it's an 8-hour drive, maybe more. No, maybe 6.
Very good, bro. A very good job.
Yeah. KFC, Burger King, McDonald's, 1,100 jobs. Those are gonna get filled quickly.
Running out of jobs. I feel like there's more than 1,100 out of work crypto traders. So you better hurry. That's all I'm saying.
Maybe there's not. Maybe it was just 1,100 people. Just you're like, fuck.
1,100 of us trading around the same money.
Yeah. We all know who wins that. What do they say? No, that's the wrong saying. I was going to say in the poker game of life, but that's not who is winning.
Mm-hmm. Stock market, new lows, down battery.
Oh, what do we? Yeah. Oh, we broke 3,800 on the S&P, almost down 3%. Yeah. Number go down.
Mm-hmm.
Well, what are you guys looking at? There's a bunch of people in the audience here. Everyone's being awfully quiet today. Tell me. No, honestly. Well, no. Tell. What are you doing to stomach this? What are you doing to I hate the word cope sometimes, but yeah, you know. We got Moon Monday.
Moon Monday today, baby.
Soft staking went live over the weekend.
Yes, that is big. And I saw quite a few of our Jennies and our generative wolves all collecting Stardust, feeling great about it. Looks fabulous. On track. Building in the bear. It's what we do.
That's what it is, baby. So yeah, we'll be talking some Star Wolves on the Moon Monday Spaces, of course, at 4 p.m. Eastern today. Make sure you come say hi for that. What's going on in NFTs? Let's you know, we are all dead, having a tough time, tough go.
Yeah, there was quite
back in there.
There was, so there's a lot of factors contributing to it's at 0.25 right now. And mind you, it was at 1.8 or 1.9 when ETH was at $1,800. So this is true down battery here. And there was a controversy over the weekend where a piece of art that one of the artists they hired to do scenes, and this isn't the base pixel art, this was an extra artist they hired to do scenes, stole one of their scenes from a Magic the Gathering card. Of course, it started the stolen art anonymous team controversy. The team says they got rid of the artist in question, apologized for it. I'm sure people combed over everything else, and since I haven't heard any other controversy, it seems to be true. You never know with these things, but that certainly didn't help. And then, of course, it is just without quite the established community as some other projects that had a few weeks to get off the ground, they didn't quite do it. And they had peak FOMO or marketing right after burning the ape, because it involved everybody, people who didn't even own them tuned in to listen to it. And then everything that's come afterwards has been fun and rich and awesome if you own the NFT. But if you don't, it has not quite been that. Looking from the outside, it's not that interesting. You kind of have to own it and be in it. So can they recapture this marketing and zeitgeist? I hope so. I'm still holding. I love the art. I love the story. I love the project. So I hope it happens. But again, this is just a tough market where predictions go out the window, and it is much more profitable to sit and wait for the new meta than try to pick a bottom. And if you know what you're doing and want to go out there and have a little fun and play with some small size, go trade the volatility. But it's very difficult, obviously, to do anything with any real size right now, as even being short here is dangerous because it could rip $200 up at any moment. So unless you're not short, that would mean nothing for the bulls, just getting back to 1,400. But if you're leveraged short here, it could rip you right out of your position. So it's just not a safe place for anybody right now, unless you were right from very, very much higher. So sit, wait, see. We are going to die. Died over the weekend. Sad.
Yeah, I'm curious as to what happens now to these NFT metas, like the free mint meta. Like, have we just lost so much attention that minting, just dropping a free mint is just going to go unnoticed? Or do you think there's still going to be an appetite for it while, the remaining people in the market, because it is already shaken out a lot of people, but the remaining people in the market just want something to do, whether it's degen or not? How are you feeling about that? Short term,
it would have to be the right. I suppose it would just have to be the right project, because I think somebody who leverages a meme, gets it in the hands of the right people, and captures everyone's attention, can see a cook. The thing is, people are only looking at one thing right now. Until until we stabilize, I don't think you're going to see anything. And, that could happen today, in a week, in a month, but I think it needs to stabilize, because even if ETH is getting cheaper, which means NFTs are technically getting cheaper in a broad risk off environment with this much volatility, I don't think anyone's going to be buying anything. No one's going to buy. But the only people buying right now, and look, they are going to be proven very, very right. Everybody paper handing their apes right now. I see Moonbirds being paper handed, WETH offers accepted on Kaijus and CloneX, and also all of the people who are buying those right now will be proven very right on the next cycle. But they can let that ETH sit there for as long as they need it to. They don't have a timer on their back. So if that's you, go shopping right now. If that's not you, it's just much more prudent to wait and see, because you're risking too much capital. No hurry.
No hurry. Yeah, this is a game of patience right now. Really, it is. Positioning yourself to be able to hold through it.
I've talked about it over the last couple of weeks, because my mentor said something to me years ago, because I'm a vision guy. I love to predict trends and see the future and get on that next hot thing before it gets hot. And he said something that people will often be later to a trend.
Who said this?
Better than you and be more profitable than you. And that's why you can have your ideas about what trends are coming and all that good stuff, but there's no reason to rush into it. You can miss that first initial move, then get the meat of it, and still trade it better than a lot of people who saw it coming for a while, just because they were too involved too early. So you're early. Yay.
Lucas just pulled up a pretty good tweet in the DGen dojo here that I'm gonna bring up.
I think it is. We're going back up.
What's that?
It's bullish. We're going back up. Oh.
No. No, but again, like if you were sitting on the sideline in cash for some of those, and again, in the same way that there's going to be a lot of tech stocks that get wrecked by this market and don't come back, and there's going to be a lot of shit coins that get wrecked in this market and don't come back. There's going to be NFT projects that end up doing the same. Again, not here to make any predictions as which ones they are. This would be a list of most of what we would consider elite, if not blue chip, down from their all-time highs in USD prices, and as pretty floor price, of course. CryptoPunk's down. Wow, 57,000 for a CryptoPunk right now. I think that you're going to see a lot of people that are flush with liquidity or even just cash sitting on the sideline being like, I always did want a Bored Ape. I always wanted to join that club. And it's down 80% right now. So start scooping. Because, most people in the world do not denominate everything they do in ETH, right? We see Bored Apes still at 70 ETH, but for somebody sitting on the sidelines and seeing that ETH is at $1,100 right now, it's a bit more palatable to kind of swoop in and start buying. But yeah, Mutant Apes, Moonbirds, Azuki, everything, just feeling the effects of it.
And the one I'm confident is going to get above the old highs here is CryptoPunks. I think.
Oh, the old highs, yeah.
Old highs in USD terms. I think some of these other ones will as well. The one I'm really confident is going to do it is CryptoPunk.
I feel surprisingly good about World of Women here. Cool Cats, I wouldn't.
Above old high?
No, but just as like an entry point.
Sure, everything on this list will 4x from where it is. No one's,
Well, I mean, and here's the other thing too, right? Like, say we go through a crypto boom cycle and NFTs, go where we believe that they're gonna go. If ETH hits 20K, which is doable, do we believe that World of Women is going to be only 2.5 ETH in a bull cycle? Like maybe, I don't know. I don't know.
Yeah.
Do you think that they start getting denominated in USD? Do you think that's a better way to look at them because they are essentially products?
Well, That's a good. It's you know, it's a good question. I think that's something I'm going to have to meditate on. I don't know.
Here's the other interesting thing in this market, and again, or not again, but I'm just going to preface it by saying I'm not an accountant or a tax professional. But if you are thinking in ETH terms right now, there is probably a bunch of opportunities for you to sell things that you have right now for more ETH than you bought it from. But because all of those transactions get reported in terms of dollar terms, you could stack ETH while still claiming a capital loss. So, you know, keep that in mind too if you're planning. I'm not saying to sell anything or buy anything, but I'm just saying, like, you know, if it's worth more ETH than you bought it for, it's still a win in terms of your ETH stack, but can still be contributed towards capital losses. So,
Indeed,
you still lose. You're still down in a money sense, but if you're not pulling it out of the ecosystem, then there you go. So, man, what a day. You know what? I think that, you know,
and it's just beginning, my friend.
It really is. Yeah. And I think maybe
new lows on the S&P right now.
I don't want the sad reality, or I guess the message that I will say is that, you know, we're going to be doing this show and we're going to be talking about it, but sometimes it's going to just sound like a broken record, and it is what it is. But in a sense, like, I think it's important for both of us to continue on doing it so that people could have a place to come and talk about it, listen to it, sit through it. You know, if your interest is waning a little bit and you don't tune in all the time, like, that's cool, man. That's fine. I think in 2018, it probably took me until about middle of 2019 for my interest in, like, crypto content to really start waning, right? Like, it did take a while. I was still always very fascinated by the stuff being built. And ironically, 2019 was probably the time to really, really take a lot of interest in it and start taking up some pretty good positions. So, you know, I think that regardless of how all of this plays out and the time frame that it was, you know, I want to be committed to continuing to build and to grow during that time, because I do think that coming out of the other side of it, you know, there is going to be another you know, party. Like, it's, you know, the celebration. We're gonna have good times again too.
Yes, indeed. The NASDAQ in the early 90s fell 40% from its high, and then went on in the late 90s to 10x, and that is what I think is going to happen here. So,
for sure, yeah.
Same type of movement.
A lot of those internet companies didn't survive either, though. So just make sure you're positioned in. Look, yeah.
Well, in Yahoo, baby.
You can gamble for sure. You could play, you know, crypto roulette, altcoin roulette, shitcoin roulette. There are definitely going to be people that strike big coming out of it, or even during it, because, you know, even in the lowest of bear markets, there's always something that has a cook or a minute. By and large, though, I would say, like, the bulk of your stack being in Bitcoin and ETH long term, you'll definitely not get all of the gains in the world that you potentially could have. But if you're looking for, like, the surest of bets in these markets, those are the two. Those are the two, right? Like, Bitcoin has been dead so many times. Bitcoin's dead. Oh, never coming back. It's never coming back. They said it when it went from 1,000 down to 200. Never hit 1,000 again. There's no reason for it to be at 1,000. Hit 20K, went down to 6. You know, maybe it'll hit 10K again one day. Who knows, right? It's always, in hindsight, makes so much sense. But Bitcoin and ETH in the last cycle really proved its strength, its value, its hardiness to rebound and whatnot, especially compared to all of the other ones that were surrounding it. Most of the Ethereum killers back in 2018, they're gone. I mean, even Cardano, it's stuck around and whatnot, and it's had a good run, and it's gotten some good gains, but like it never really solidified itself as like one of the true players. There's two in this industry, right? Yeah, Cutter, you really like that ETH is this low. If you're producing cash flow that you can continue to reinvest in, I mean, just set that dollar cost average of 10% of your income, something that you're comfortable with investing and not looking at it. And maybe it's 6 months and it's looking great, or maybe it's 3 years or 4 years and it's looking fantastic at that point, right? So yeah. I always like to, somebody brought it up too, and I always like to look at it like, back when I was having an hourly job or my salary outside of crypto and whatnot. I always thought like, if I assume that eventually this thing's going to 10x or 20x, if I invest 2 hours of my wage or my labor into it now, somewhere down the road, that 2 hours is going to turn into a half a week or a week's worth of labor, right? And now all of a sudden I can pay myself a full week of labor or a full week of salary for that very, very small amount that I put in right now.
Right.
But it's got to be a long-term play. There was it was too easy for a little bit there. It was. And that's not to say that people didn't capitalize on it or shouldn't have capitalized on it. People did really well for themselves and made a pretty incredible amount of money in a short period of time, but it can't always be that easy.
Why, Melinda, why?
Oh, love you guys. Let's see what else. I don't really have anything else pulled up. Things go quiet when this is happening. There's only one. The eyes are only on one thing, and that's the price, right? So attention tokens need attention on them, and when they are not on them, price goes down.
We will see if even if ETH just calmed down into a range, like a $1,000 to $1,200 range, if a new NFT meta springs up.
Yeah. Yeah. Hey, NFTs could do great in a like if crypto turns into this like sideways bear market action for an extended period of time, NFTs could be in a great spot for it.
Yeah, I mean that's why while it's hard to know when a general crypto bull market will come back, I think there's just a whole set of people who are not leaving NFTs, and we're in a general risk-off environment, and people are going to not buy things there. So once we stabilize, we'll see.
Yeah, well, and that's and that's the beautiful thing about it is people start buying ETH when it's low, and they go, "What do I do with it now?"
I think maybe the next, like every time we have a new meta, we take a little of it with us into the next one. So I do think free mints are a trend that are going to stick around. I don't think all of a sudden we move away from free mints. It'll just be part of the next meta, not the entire thing.
Yeah. Yeah, I do think that one thing we will see less of in the future is like the truly expensive mints. Like I think for a super hyped, well-known, reputable brand or something getting in, like you might see those 1 or 2 ETH Dutch auctions or selling points or whatever. But I think by and large, like I think most things are gonna end up staying under 0.1, 0.08. You know what I mean? Like,
yep.
I think I don't. Well, okay, fuck. I shouldn't say never, but like I think you're gonna see less pixel mons go down.
Mm-hmm.
Right, and I think the market's going to get smarter. I think people are going to come back into it and say, I'm not falling for this shit again, right?
Yes, and well, yeah, I honestly think yes and no. I do think that people will also. I think we're like it's going to start over again, right? First art will be important, then utility will be important, then community will be important, then roadmaps will be important, then it'll all pop again and we'll start the cycle. Once again, like people think they've learned, and you will. It'll be it'll be a little different and slightly more sophisticated, but I think a lot of the stuff people fell prey to is just part of human nature, and we'll fall prey right back to it again.
Yeah. I mean, when you're starting to talk through it, yeah, I could see it too. And it is, I guess, a function of risk reward. Really, incredible upside comes with the option of going to zero, or sorry, the chance of going to zero. It has to. Again, it just can't be that easy. I mean, the games that the VCs play are difficult, right? Like, I don't think, and I'm not sticking up for VCs or anything like that, whether you believe in them, I don't believe in them, they're not Santa Claus, whether you support them or think it's a necessity, or, you know, whether or not they're just in their castles throwing money around and getting fabulously wealthy. I mean, you have to get those 1,000Xs, which is what fuels them. There's many zeros along the way. There's many break evens along the way. There's many 10%. I heard two VC simp. Yeah, I simp. I don't know. Yeah, but again, it's just that risk reward. You gotta have a chance at zero to be able to get a chance at 100x. There's no downside protection like that when you're looking for those returns. So you just gotta be careful. What's up, Drip? Miss you, buddy. Drip. All right, my man. Anything else you want to talk about today? I'm sure we'll have some more of this tomorrow. Hopefully the number goes up a little bit. Or actually, good question. Like, do you think it needs to go down more? Like, and I know that's not like a good thing that people want to hear, but like,
one of those things where capitulation when you feel it.
Yeah.
This doesn't feel like it yet, right?
Yeah, I know, and that it's weird. It's hard to pinpoint it in that time. I also would have said we never hit peak euphoria. But in hindsight, I'm wondering if I was just dead wrong about that.
Yeah.
You know, maybe we did. Maybe we were the. It's not like that saying, like, you're not stuck in traffic, you are traffic.
Right.
You know. Exactly. Who knows?
True that.
All right, dude. We will. I think we can wrap this up here, but we'll be back live tomorrow at 9:30 a.m. I'll do the rundown. We talked a lot about the price of crypto. That was about it. A little bit of NFT discussion at the end there, but nothing super substantial. Right now, this is just about banding together, being here for you guys. You guys talking through it, talking with us, having as much fun as you can too. I think there's still lots to be excited about, whether or not it feels like it.
Well, if you could find stuff that you actually have fun doing when there's no money involved, that type of stuff is probably going to be successful on the next cycle. So
there you go. Right.
Yep.
I enjoy doing this show with you. Sometimes it's, you come in and it's hard, I want to be optimistic for everybody, but the pain is real. It's the dynamic is absolutely no equity market talk. No, I think we talked about a lot of that stuff. S&Ps, stocks, Coinbase. I don't know. Kind of just going through it all right now, trying to make sense of the world, right?
No, I mean, here's the thing. There's technical support on the S&Ps between 34 and 3,600. Like, people don't talk about mortgaging the house much. I'd mortgage my house in that range to buy S&Ps because there are some unfilled gaps there. And it just feels like it would be too far. That said, I think we're in a moment where it could literally reverse at any time, and it's impossible to know. And there's no reason to try to be early on it. It's better to wait for confirmation, just because the converse can just chop you up. It's different when you're trying to pick a bottom in something that could V. Okay, this isn't really going to V. I have a very hard time, anything's possible, but I have a very hard time believing this is going to be a V-shaped recovery. So in that case, no reason to rush in. If we thought this was still going to be a V, there's maybe some urgency in finding a bottom more than there is.
We will be paying attention. Also, guys, honestly, at this point with the show, like, you know, sometimes the content is a little bit thin. Like, we had 3 days off there, and I'm sure there was some NFT stuff to talk about and whatnot. But like, is specific niche NFT projects what you still want to hear about? Do you want to just talk about the market? Do you want us to focus in on something else? Is there a segment that or something that we've done in the past that you would like to see us bring up? Like, you know, at this point, feel free to chip in and help form the show while we're kind of talking through it and whatever. Because I will say this, back in February, it was really easy to just end up doing a 2-hour show, being like, this was a cook, this was fantastic, this is a great project that's launching, price go up. It was seamless. Like, Free Market and I would just wake up and bang out 2-hour shows every day. You know, but right now this is about you guys. This is about what you want to hear, and we want to keep you engaged. We want to keep you at least feeling long-term bullish about stuff. I don't think any amount of you know, let's just say circle jerking can make people feel good about right now this morning. But this is the long-term play for us, and we want you all to be along with it. So stay vocal, stay chatting, let us know. You know where to find us in the Discords and stuff like that, and we'll make it through together, because that's at this point, that's what you do. You band together, you talk through it. You give each other the hugs when you need to, and we'll celebrate when the time comes.
There it is.
All right, guys. On that note, of course, this is always recorded. Check it out if you tuned in late. Thank you for everybody's time. 28 people for most of the show now, which is great. That's actually up. So I guess we're not wholly correlated to the market. So, keep tuning in, keep coming to say hi. It does help us too, right? Knowing that we're doing this for people is one of the fuels to our fire. So, we love seeing you all in here. Cheers to Kenza. We'll catch you tomorrow at 9:30. Free Market. Get us out of here.
Tables, D-Gen.